Okay, let's unpack this. We are diving into a project that just perfectly encapsulates this wild, fascinating intersection of AI, decentralized finance, and, well, meme culture. We're talking about the rapid, really surprising evolution of I16Z and its transformation into the infrastructure layer that we now know as ElizaOS.
Exactly. I mean, this whole thing kicked off as a self-aware, playful, you could even say satirical reference to the venture capital behemoth Andreessen Horowitz's 16Z.
Right, a joke. But it very quickly went from a joke coin to a, multi-billion-dollar infrastructure layer?
Yeah.
All designed for autonomous AI agents to operate on-chain?
It's an incredible story.
So our mission today is to figure out, how did a project born from digital satire become such a serious Web3 player? What's the deep tech powering its agents?
Yes.
And why on earth did they do this massive multi-chain migration and legal rebranding?
And you really can't tell this story without starting with the initial shock factor. This was not a slow build at all. The original coin, AI16Z, it saw this explosive, just unprecedented rise. It increased more than 20 times in just 12 hours.
20 times in half a day. What was the catalyst for that kind of growth?
It was viral validation. That 12-hour surge happened immediately after it got a public acknowledgement, an indirect one, but from the real Marc Andreessen.
Wow.
That kind of digital nod mixed with perfect market timing was just rocket fuel.
That initial explosion is what caught everyone's attention, but I guess the foundation was already being set by a much bigger market trend.
Oh, absolutely. The AI agent sector itself is, it's surging. We're seeing exponential increases across the board. I mean, the data shows that one segment of this market, which includes I16s, saw its total market cap increase by a staggering 2,900% since its inception.
So this was never just a meme story.
No, it's a reflection of the market desperately trying to price in the future of autonomous software.
So let's delve into that origin story. The project launched back in October 2024 on a Solana platform called DAOS.UN. And the initial goal was, believe it or not, incredibly modest.
Yeah, they were just trying to raise around $75,000 to build an autonomous investment system.
And the central idea was, like you said, brilliant satire. They created an AI agent and they named it Marc Andreessen.
A character modeled directly after the A16's co-founder. And its whole task was to manage a venture fund autonomously, just based on community input. It was essentially making fun of the massive influence of VCs by decentralizing and automating the whole thing.
And of course, the beautiful chaos of Web3 just took over. The premise gained traction so fast that within days, fueled entirely by the meme wave, it hit a peak market cap of over $2.5 billion.
That scale it's hard to grasp. But if you put it in context with the rest of the Solana ecosystem, we saw things like the Joe AT meme coin, which hit a peak of 300 million in less than a week.
And this went 10 times beyond that.
Exactly. It shows the market wasn't just buying a joke. It was buying infrastructure wrapped in a joke.
Before the big rebrand, the project had a really unusual economic system, a dual token model. Can you walk us through that? It involves some tricky percentages.
Sure. So the primary token was AI16Z. This was the tokenized asset of the fund itself and also the main governance token. If you held it, you had exposure to the fund's theoretical profits.
Okay, simple enough. And then there's the other one, DeGenAI. That's where it gets a little more interesting.
That's right. DeGenAI was created by the original developer, and it represented a separate AI agent operation running alongside the main fund. But crucially, its economic health was directly tied back to the performance of the fund.
How so?
The fund charged an 8% asset under management, or AUM, fee.
So if the fund was managing $1 billion, that fee would be $80 million a year.
Precisely. And of that 8% fee, 80% of it was automatically routed to repurchase DeGenAI tokens on the open market.
So it created constant buy pressure.
Constant buy pressure. It made the value of DeGenAI inherently tied to the fund's success, which rewarded the early developers and ecosystem participants.
That's a pretty sophisticated loop for a project that started as a joke. But beyond the money, how do they solve that eternal problem of trust? How do you know the community members making proposals aren't just shilling their own bags?
And what's fascinating here is their solution. They called it the virtual marketplace of trust. They realized they couldn't just rely on token weight, plutocracy. They needed merit.
How does that actually work in practice?
It's essentially a meritocratic governance system baked right into the protocol. Community members with enough AI16Z tokens can propose investments to the AI mark.
Okay.
The system then assigns a trust score to these members, sort of like a reputation rating. And this score is determined by tracking the hypothetical profit or loss that would have resulted from their past recommendations.
So if I recommend 10 investments and 8 of them tank, my trust score plummets, and my future voting power, it doesn't matter how many tokens I have, it just diminishes.
Exactly. The purpose is to make sure the fund's decisions are guided by credible intelligence rather than social noise. Your influence isn't just about how deep your pockets are, it's about how good your past calls were. It's a mechanism for a productive dialogue between human intelligence and AI execution.
This ability to track all this complex human behavior and automate decisions, it had to be built on some powerful underlying technology.
It did.
And this is where we transition from the DAO to the technical framework, ElizaOS. We should be really clear here. ElizaOS is not the AI character. It is the open source TypeScript-based framework for building, deploying, and managing any AI agent.
This is the critical pivot. The project realized its governance structure was actually less valuable than the tool they built to manage that structure. And the data completely backs this up. Eliza became a top-ranked AI repository on GitHub, over 8,800 stars, 2,300 forks.
That's a lot of developer interest.
It is. We've seen documentation confirming that at least 1,000 teams or projects are actively building on or using this technology. It's foundational infrastructure now.
Let's break down that architecture, because the complexity here is really what allows for true autonomy. What are the key components of an ElizaOS agent?
The whole system is completely modular, and it starts with what they call character files.
Character files.
Yeah, think of them as these detailed JSON configuration files that define the agent's DNA. They set the agent's personality, its goals, its expertise, how it communicates.
So it's not just a trading script. It's like you're giving the AI a persistent, complex, specialized identity.
Precisely. You could, for example, define a YieldMax or DeFi degen character who only speaks in crypto slang and is programmed to spot common flash loan attack patterns, and that identity stays consistent across all its operations.
Okay, so how does that identity interact with the world?
That's where the plugins come in. This is the extensibility layer. The design currently includes well over 90 official plugins. Yep. And these are the integration points that let the agents do more than just internal processing. They span everything from social platforms to DeFi protocols for automated trading and lending, all the way to integrating directly with multiple blockchain networks, Solana, Ethereum, Base, you name it.
For an agent that needs to constantly track market shifts and react, memory must be absolutely crucial. How does it remember what it's done or what it's learned?
That's handled by some pretty advanced memory management using a technique called retrieval augmented generation, or ARG. Think of ARG as the agent's own personalized searchable library. When the agent gets a prompt, it first searches its memory bank for relevant context historical trades, past conversations, learned patterns, and it uses that retrieved data to generate a much more informed action or response.
So the agent isn't starting from scratch every single time.
Not at all. It allows them to maintain this deep contextual awareness. For example, an agent can remember a profitable trading pattern it learned on Base when it's executing a totally separate transaction on Ethereum. The knowledge base is portable, it's persistent, and it's always growing.
And that capability has already fostered a whole ecosystem, the Elizaverse. We should probably highlight some of the real utility being built on this.
Well, the most famous is still Pomerka, the AI-driven fund manager we started with. But the framework's versatility is really clear in projects like Luna.
Luna, the AI influencer.
The very same. An AI influencer that autonomously interacts 24/7. And Luna's performance was so compelling that she was actually hired as an intern by Story Protocol to run its official X page.
An AI intern that manages social media. That's a serious blurring of the lines.
Absolutely. And on the trading side, you have DigiNapal, which was one of the first Eliza agents developed specifically to trade NFTs autonomously, tracking floor prices and liquidity across different marketplaces. It's not just simple token swaps, it's automating complex multi-step actions.
Okay, so moving into these strategic pivots. All this high-profile growth meant the original name, I16C, was becoming a huge legal risk.
It was a ticking time bomb. They were asked by the real Andreessen Horowitz to change the name because of potential trademark confusion.
And that request seems to have cemented their need for institutional maturity.
It did. The name change to ElizaOS was officially announced in January 2025. It was a clear signal that they were moving away from satire and toward being a serious technical standard.
But they didn't just stop at a name change. They made an even bigger strategic move toward institutional readiness by adopting a specific legal structure.
The Decentralized Unincorporated Nonprofit Association, or DNA, established in Wyoming.
This sounds important.
It's an enormous defensive moat, and it's arguably the blueprint for future DAOs. The DNA structure is groundbreaking because it provides the decentralized organization with limited liability.
That is key. It shields individual token holders from personal risk if the fund faces legal trouble.
Exactly. It allows the DAO to legally enter into contracts with third parties, whether that's for cloud hosting, API services, or even auditor contracts. It gives this decentralized thing a formal legal existence within the current regulatory framework, and that's vital for attracting institutional capital and serious developers.
So if we connect this DNA legal structure to their tech ambition, the most critical shift came in late 2025. The multi-chain migration.
Right. They abandoned the original Solana native token for the new multi-chain ElizaOS token, which is now live across Solana, Ethereum, Base, and BNB chain.
And this transition was impossible without a very specific piece of tech.
It was. The whole migration and all the subsequent cross-chain interactions are fully powered by Chainlink's cross-chain interoperability protocol, or CCIP.
Why is CCIP so critical here? Can't they just use a regular bridge?
A regular bridge just moves wrapped tokens from one chain to another. CCIP is so much more powerful. It's integral to their agent framework because it lets the agent seamlessly move both tokens and complex instructions or state across different chains. It's a unified system for secure communication.
So an autonomous agent could spot a high-yield opportunity on Solana, use CCIP to transfer its knowledge and an instruction set to an agent on Ethereum, and have it execute a trade there, all in one autonomous workflow.
That's the vision. It makes autonomous action truly multi-chain. Agents can maintain their memory and execute complex logic across different blockchains without worrying about fragmented liquidity or the security risks of using multiple third-party bridges.
Let's talk about the tokenomics of that migration. It involved a crucial step they called the tithe. I know the numbers can be a bit confusing, so let's break down the math.
It was basically a redenomination designed for future liquidity and funding the ecosystem. The total supply expanded 1 to 10, going from 1.1 billion to 11 billion ElizaOS tokens.
Okay.
However, original holders swapped one AI16Z for only 6 ElizaOS.
Wait, so if the supply expanded 1 to 10 and holders only got 6 tokens, where'd the other 4 tokens per original token go? That's the tithe, right?
That's the tithe, precisely. Right. The remaining 4 tokens, that 40%, were allocated to a generative treasury. And this is the key insight. This treasury is not managed by a human foundation or a multi-sig. It's managed autonomously by ELIZA agents themselves.
That's a huge difference. A treasury managed by software dedicated to finding software.
It's a profound change. It's explicitly designed to fund ecosystem growth, increase liquidity across chains, and maybe execute buybacks based purely on agent-determined protocol health metrics. It's a mechanism for the protocol to self-recapitalize.
For true long-term sustainability.
Exactly. And a quick reminder for you listeners, if you are still holding the legacy AI16Z token, that migration window closes on February 4th, 2026.
Looking ahead, the project's future vision is pretty ambitious. They have this quote that deploying an AI agent is the new creating a website. That suggests they want to democratize this technology for everyone.
Absolutely. Their focus is on the upcoming Eliza Cloud. It's a platform intended to democratize agent creation and bring users on-chain without them needing any technical knowledge. They want to make the blockchain completely invisible.
And how do they achieve that invisible blockchain experience for users who might not even know what a private key is?
They use a system with back-end wallets and something called BY402. The core idea is decentralized authentication and authorization. It lets users control wallets through familiar things like social login without dealing with seed phrases or complex key management.
So it's a secure, abstract layer.
It is. So users can deploy an agent and interact with Web3 without that steep technical learning curve. And their long-term ambition seems to be a total infrastructure play, even exploring a dedicated layer 1 blockchain, specifically for high-frequency agent-to-agent interactions.
If they do that, they are moving beyond an application layer and becoming a core operating system for this whole generative economy.
This raises an important question, though, which the analysis brings up. Despite this incredibly advanced technical framework, the 1,000 teams, the CCIP integration, the DNA structure, we know the project has had huge technical success. But the specific functional utility for the new ElizaOS token itself, it remains officially undefined in their documentation.
That's the critical disconnect.
It is. The token primarily acts as a governance mechanism. You vote with it, but its functional role in the growing ecosystem is vague. Is it required to pay fees to deploy an agent on Eliza Cloud? Will users have to stake it to ensure their agents behave honestly? That crucial requirement hasn't been defined.
So the value of the token is tied to speculation and governance rights, rather than being essential for the day-to-day operation of this multi-billion-dollar framework being built on top of it.
Yeah.
Doesn't that risk the token price becoming disconnected from the real utility of the system?
It absolutely does. It leaves a gap. If the framework succeeds wildly, but you don't actually need ElizaOS to use it, the token holders might not benefit fully. And that ambiguity just adds to the other risks we identified. Extreme market volatility. We're talking historic 90% drops from peak valuations, potential smart contract vulnerabilities, and ongoing regulatory uncertainty around AI agents and DAOs.
Which is why those legal moves toward DUNA were so important.
So important. But the token utility needs to catch up.
So what does this all mean? The key takeaway here seems to be that a satirical project built on a powerful open source technology was smart enough to make three critical strategic pivots. They solved the legal question with DNA, they solved the scalability question with CCIP, and they solved the trust question with their meritocratic governance system. They successfully pivoted from a joke coin to a foundational infrastructure player that is defining how autonomous AI agents will operate across Web3.
And I think the most profound innovation here might not even be the trading bot or the framework itself. It might be the project's effort to create agent-bound tokens, or ABTs, and use that DONA legal structure. This transition means we are creating a framework where AI agents can eventually become self-sovereign entities. Self-sovereign?
Capable of earning reputation and even facing financial penalties or slashing for misconduct. So if AI agents can legally enter contracts and be financially penalized for bad behavior, how far away are we really from a fully autonomous, agent-run generative economy? That's the question you should be mulling over as this technology continues to evolve.